The best of times, the worst of times. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of May 13th, 2019. And I make the a reference to Charles Dickens' novels, A Tale of Two Cities, where he says it was the best of times, it was the worst of times. And in the novel, it talks about a time of chaos, conflict, despair, as well as happiness. It really draws a contrast between London and Paris during the French Revolution. And I think it's apropos of what's going on in the market right now, you know, the best of times, the worst of times. You can find an equal number of articles that make a case for the, prosperity and growth and bullishness, and the market's going to continue up, and the pullbacks are a blip. And you can also find articles, an equal number, that make a very dire case for how everything's going to come undone. The wheels are going to come off, and that I saw an article, a 65% correction in the market would be completely normal. It would be hard to think of a 65% correction in the market as normal. That would be a really, really, really big deal, and we would profit from it too. I think it's the best of times for traders, for swing traders, because the market's volatile, it's moving, and we don't care if it goes up or if it goes down, because if we have a good trading plan, we take the best trade candidates and really disconnect them from the overall market. I'm showing the S&P 500, and what's it going to do next? It is really, really hard to tell. The S&P 500 is, a couple weeks ago put in all-time high, but it was kind of weak. Now it's pulling back. We're in the midst of, the U.S.-China trade war, and resolution is unclear when that would be resolved and how it will play out. And you can find an infinite number of opinions about who's gaming who and who's going to have the advantage and what the outcome is going to be. And it is too complex to predict. You just can't predict, how it's going to land, what the final deal will be, what the impact will be. Of course, the U.S. and China will both benefit. The world will benefit from coming to a fair conclusion and a fair trade deal. But the stakes are high. It's complicated, and it will probably take time, and there will be gyrations. So as traders, it's kind of the best of time, because there's going to be continued market volatility, and we can profit from swings. And if we can find trades that are kind of disconnected from the S&P 500, the overall market, and they're just in clear bearish trends, or they're in clear bullish trends, irrespective of trade deals and politics and the market, we're going to do well. And those are available. We find them, we trade them, and I'm half long, half short, and we're in profit both sides, and those kind of trades are available. So I like the term, we retreat to reality, right? We don't, we pay attention to the news and the big context and what's going on, but we trade based on objective setups. Let me show you an example. We're short IQ, Chinese stock. This thing, it's such a clear, orderly chart. It had this huge bearish move, had a perfect correction, and now a continuation of that bearish move. This looks nothing like the S&P 500. These are the kind of trades I'm taking, and we're in nice profit on IQ. We're also bullish on some trades, EVH, healthcare stock. Big bearish move and a bullish correction. We look like we got a target up to 18, and it's marching along nicely, and we're in profit. So there are all kinds of trades like that, and those are just a couple of examples. There are many, many more, and so I just think it's important to be grounded in reality, trade trends, And we can trade the S&P if if it goes down a little bit more, I'm going to be going short. But right now it's kind of indeterminate. It's right here in the middle of the Ichimoku cloud, sitting at the 50-day moving average. What's it going to do next? I don't know. If it breaks down through this, then there's a clear case that something like this could be happening again. We'll trade that. And you can see this on the S&P. You can see this on the NASDAQ trading the QQQs. You can see it on the Russell and some of the international indexes as well. But meanwhile, there's plenty of opportunity in individual stocks and ETFs. So it's the best time for traders because the market's moving. There's volatility. There's action. It's the worst of times for buy and hold investors because there's just a tremendous amount of uncertainty. And I feel bad if the market is going to decline 65%. It could, right? It could. I don't know if that's normal or not, but it could decline. And the whole buy and hold mentality, they're going to get hurt, and it's not going to be fun. And there's no reason for that. There's no reason to watch your portfolio shrink. Why not trade the ups, trade the downs, make profit either way? And that's what we're doing. So we're paying attention day by day, picking the best trades, watching the news, but not being overly concerned about it. Just looking for opportunities as things swing and capturing, profits in those swings. And we don't have to time the market perfectly. The S&P put in all-time highs. It's pulling back. If it's going to make a big move down, it will be announced, and we will have time. If there's going to be another move like there was late last year, we'll have time to profit from that. We don't have to, get ourselves wrapped up in angst about, the exact moment or day to get in. If it's going to be a big move, it'll be a big move, and we can be in it, right? We won't catch the absolute top, but we can participate in it if we just stick to some trading rules, stay objective, and be fairly disciplined about the whole thing. So kind of a long-winded ramble. I don't know which way the market's going, but I do know that it's volatile and there are plenty of opportunities and we are capitalizing on them. So be nimble, use risk control, and I that's the cornerstone of my trading approach is using risk control, using proven disciplined trade setups and recognizing some trades are going to lose. We've had a couple lose lately, but we're still very, very profitable for the year. We're actually even with the indexes and about ready to pass them up if they pull back a little bit. And that's pretty cool. That's pretty fun. So be nimble, use risk control, and trade a plan. Plan the trades, trade the plan, and that is the key to being consistently profitable over time. So hope that wasn't too vague, too abstract. I think it's the right advice, and that's where we're at. So again, use risk control, trade your plan, capitalize on opportunities when they show up, and have fun. Don't get too wrapped up in it. All right, take care, and we'll catch you on the next one. Bye.